A very good morning, good afternoon, and good evening to all. Myself Vaibhav. In our today's session of automated trading, we will be try to finish up our setup involving the linear regression intercept. This is a fairly simple setup, and we have finished the buy side. And in today's session, we will be working on the sell side. There is a technical description here. I hope you are well familiar with the functionality now. And before we get started, here is a standard disclaimer. I would like to remind that this session is simply for the tutorial purpose and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of it, I would recommend that you do extensive testing before running it on live account, and also run it on demo account for sufficient enough time. And of course, nothing in the webinar is to be constructed as an advice to trade or for any particular setup. With that, we get started for our day. And in today's setup, we will be working on the sell side. So for a sell side trade, the requirement is that we want the last 4 hourly candle to have closed below the linear regression intercept on the 4 hourly time frame. So this is a 4 hourly chart, and we want to be trading on the side of the trend. And so accordingly, if it is rising, if the price action is above the linear regression intercept, then we are looking for a buy. If it is below the linear regression intercept, then we are looking for a sell trade. And the linear regression intercept, we are utilizing it as our guiding indicator for the direction of the trend. Then we move on to the hourly setup. In hourly setup, we want the trade to happen when there is a change in direction. So we are just concerned with the first hour when the candle closes below the linear regression intercept, and prior 4 candles were above the linear regression intercept. And as I said, we have already checked for the 4 hourly condition. Then the next requirement is that as and when the linear regression intercept gives a signal on the 1 hourly time frame, and that means we want the last 1 hourly candle to have closed below the linear regression intercept, and that is after due correction and retracement, and of course the consolidation. So as you can notice here, we had this break on the downside, then it continued for a while, and then we saw this retracement, and then again the trend down the downside resumed here. So we want the trading to happen somewhere after these are as closed, maybe somewhere here, and then it will continue to go down, and next time around the trade will happen somewhere here. And as you can see, now it will depend on the time frame whether we end up in profit or the loss. Of course, we are utilizing the ATR on the daily time frame for the stop loss and the target purpose. So the pips for the stop loss and the target price will be calculated depending on the daily ATR. So somewhere here the trade will happen, then either way it can go in profit or loss. We are utilizing a risk reward ratio of 1:2. So in case we go right, then we will be making twice the amount of money which we will lose in case we go wrong. So now we head back to the Visual J Forex platform to see what we have done so far. We are working with the start point of on candle, and then we got this candle setup instrument, candle instrument subscription done. The default instrument is Euro USD, and then the position amount has been defined at 0. We got linear regression intercept on the 4 hourly time frame. We got 4 hourly candles data, the historical candle, and then we got the linear regression intercept on the hourly time frame with look back period ranging from 1 to 5. So all these cumulative 5 hours linear regression intercept data will be looked at, and then we will be comparing it to the closing value of the last that hour's historical candle. And here also, as you can see, the look back period is starting from 1 to 5, and then comes ATR into the picture, the daily time frame as I said, we are utilizing the proportion of the daily ATR as our stop loss and target. So here we have defined these conditions. So here the stop loss is of 20% of the daily ATR. So we are multiplying the ATR range by 0.2 to get the 2%, 20% value, and the target price is at 50% of the daily ATR. And after that we are going in for a market open. So this is the buy side, which we have already finished. And now with that, let's shift our attention to the sell side. We will want to build a symmetrical setup, so all the conditions which we have put on the buy side will be inverted, and identical setup with the change in direction will be built now. So let's start with the if blocks. So here we get the if blocks to check on the conditions of the linear regression, intercept, and historical candle close on the 4-hourly time frame. So we have to make sure that the candle 15 has closed below the linear regression intercept on the 4-hourly time frame, that is line 10. So we go and get the closing value for the candle 15, and that is auto created variable, and the candle 15 is here. So we'll look at it, the closing level, candle close, and that candle close should be below line 10, and then we put this condition: first input less than second input. Okay, and then the next requirement turns to the hourly setup, as we have this 4-hourly requirement in place. The immediate attention then shifts to the lower time frame charting, and then we want to look at the last hourly candle close, and it should be below the linear regression intercept of last hour. So what we do is we take line 16, which is the last hour's linear regression intercept value, and we compare it to the closing levels of the historical candle with shift value 1, and that is candle 21. So we want candle 21's close to be below the line 16. So we bring in further if blocks, and as I said, we are going to need almost 4 to 5 if blocks. So let us get a couple of it straight away, and the condition will be first input less than the second input. Okay, and then our attention turns to candle 22, and here it is. We want candle 22's close to have been above that hour's linear regression intercept, means it was in the retracement zone, and for that we have to compare the candle 22's closing value to the linear regression intercept value with look back period of 2. So we go back here and we take line 17, and line 17 should be less than the candle 22's closing value, means candle 22's close is above the line 17. That means first input greater than second input. Now let us get these three if blocks in place. So here we join it on the multiple action. Okay, it should be good enough as a distance, and yes, identical. Almost. And then we get the remaining two, which we have utilized, define the conditions, and then we will build on it. Now we have to take the closing values of candle 23, candle 24, and candle 25. So straight away we take these closing values and do the comparison in one go. So what we have to do is take candle 23's close, candle 23's close. Oops. Okay, then we take candle 24's close. Okay, then it is the turn of candle 25. All right, and we have got these historical candles closing levels, and now we have to compare it to the respective linear regression intercept level. So what we have to do is first compare candle 23's closing level, and the candle 23 is with shift 3, shift 4, and then shift 5 for candle 25. So we have to do the comparison in the same order, and all right, so here we have to compare this candle 23's closing value with line 18. Line 18 has a look back period of 3, shift 3, and shift 4 is line 19, so we compare it to the closing value with shift 4 on the hourly time frame, that is candle 24. So here we, and then we compare candle 25 closing level with line 20, shift 5 for both these blocks. So now the requirement is fairly simple. We want all these hourly candles to have closed above the respective hours linear regression intercept values. So we will need the first input to be greater than second input, and that will make sure that all our hourly conditions are in place. So here first input greater than second input, and first input again greater than second input. For these as well, we will need first input to be greater than the second input. So we take these two more blocks and we join the plot here. first input greater than second input, and in those two if blocks we will need to do the comparison on the 1 minute time frame. We will looking at the last 2 minutes closing levels, as and when the price action starts to rise above the last hours sorry starts to fall below the last hours candle closing level, we will initiate the sale trade. So that is and we want the setup to be symmetrical, so just to make sure we are not missing out on any condition. Yes, we are all good as far as I can see. Now is the time to look at the comparison between the historical candles on 1 minute time frame and comparing the closing levels to that of last hour's closing level. So we take candle 27 and candle 28 closing levels here. These are with shift 1 and shift 2 respectively, and we will need candle 28 to have closed above the last hourly candle, and the last hourly candle is with the shift 1, that is candle 21. So we will need to take candle 21's closing level in both these it blocks. So we first take candle 21's closing level, and candle 21 is here. Now we want the price action to start falling below the candle 21's close, and that means we will be looking at the candle 28's closing level, and it should have closed above, and then the candle 27 should close below the candle 21's close. So we first take this closing value, and then we take candle 27's closing value, and here first input should be greater than second input, and then in this case candle 27 should be less than the candle 21. So now we bring in open at market block, and it is here first input greater than less than second input, it is buy, it is sell. So here we are. Now we will need to take these stop loss and target levels. Lot amount, as is the customary practice, we usually prefer to keep it at 0.1 million. Slippage 2 pips is good enough for Euro USD. So keep it 2 pips. Stop loss, we have defined SLP is our stop loss and take profit is TPP. So we take this previously defined values, the result of the calculation which we have done. So we are now almost ready to roll. We will save this file and do testing on the JForex platform to see what kind of trades will be initiated. by this setup which we have built using the linear regression, intercept, and the price action. We have kept it fairly simple. We haven't really brought in other indicators. It is still the single indicator play. So far it is looking promising. Let's see what the results say, and then we will be in a better position to make our mind. So let's save the file first. Save draft. We started working on June 11th, so it is titled as June 11th. We now export the file to the folder in Java format. Yes. So here is our June 2020 folder, and we save it, and we import the file here. I think one trade has been opened by one of the algorithm which I have kept running here. I don't know which one has actually traded. So now we need to zoom out a bit. June 11th, here is our file. This is the code in Java. It is not that long, exactly 999 lines, and full of it is 1002. First we will compile it. Okay, compilation successful. And then we test it. We will test it for last 1 week, as we don't really have much time. And I think if you have, you should better test it for many months. What we do is we simply use previous week. Instrument remains the same. Account is with 0.1 million equity, and we are all set. The slippage, and we change a bit. Take profit and stop loss we don't need to change, as we have defined it using ATR, so it will trade accordingly. So here our test run begins. So far, two trades have happened. One has closed in loss, one has closed in profit. another trade happened which closed in loss. And one more, again this time around it closed in loss. So we have three trades in loss and one trade in profit. And though even after two trades going in loss we were in profit, but after third trade we have ended up in loss for the week. But that's not representative. We will need to test it for many more weeks, for many more months, and then we will have a clear idea of how things are shaping up. So that's it from my side for today's session. And tomorrow we will be back with a fresh setup. Have an excellent day ahead. See you tomorrow. Goodbye.